in the case of Bitcoin, right now the supply increases about 1.5% a year. In about 20 days, we're going to have a halving, and that's going to fall in half. So it's going to be 0.75, 0.75% a year. And then in another 4 years, it's going to be, half of that. And then, just asymptotically as it approaches zero. And so
Hey guys, welcome back to Everyday Finance. In this video, Larry Lepard discusses the crypto, Bitcoin, and gold, according to Larry Lepard. If someone believes they will be easily frightened away, then their level of caution is excessive. Consider this. It's crucial to accurately predict the outcome, as any miscalculation could result in a complete loss. Therefore, it's important to avoid any incorrect allocation of resources. Even though you were aware of it, you chose not to purchase any of it. You're going to really regret it, though. Larry Lepard believes that for many individuals, it can be beneficial to allocate a certain percentage, let's say 10% of their investable assets. If this thing performs as expected, it will outperform everything else, and you'll be pleased with your 10% investment. Just consider the perspective of a seasoned financial analyst. It's quite evident that numerous investors, over the course of several years, have made a multitude of investments. However, it's important to acknowledge that losses can occur. Allocate 10% of your investable assets and potentially recover, even in the worst-case scenario. If the value of this thing were to drop to zero, which seems highly unlikely, and you have 10% of your net worth invested in it, or 10% of your investment in this matter were to decline significantly, you would still have a substantial portion of your assets intact elsewhere, and lots of things Larry Lepard discussed. So please watch the video to end, and share this video, and subscribe our channel Everyday Finance. Thanks.
People really need to fully understand what this thing is. They really do. And I tell people who are trying to orange pill other people, I say, you've got to explain the risks here. And you've got to explain to them that, at any given point in time, there could be a big drawdown. And if they think they're going to get scared out of it, well, then their weighting is too high. I mean, look, if this does what I think it's going to do, the only wrong allocation of this is zero. And so, seriously, if you have some, if it does a 100-bagger, 1,000-bagger,
I agree.
And you heard about it and you didn't buy any of it, you're going to real regret. But honestly, I think for a lot of people, just having, say you've got investable assets of whatever that number is, 10% of your investable assets in this thing, if it does what I think it's going to do, it's going to eat everything else. You're going to be really glad you put the 10% in. And the average investor, if you think about it, you've probably made average investors made plenty of investments over many years. You can lose 10% of your investable assets and recover. You can. If we're totally wrong and it goes to zero, which I think is impossible, but if it does, and you've got 10% of your net worth in this thing, or 10% of your investable worth in this thing, and it craps out, you'll be okay. You still got 90% somewhere else. And what I would say,
I'm 90% in Bitcoin, but
exactly. You and I are, we're on the other end of the spectrum, and I'm not quite that high. I'm more like 60% now. The price has gone up, and the rest is in gold. But that's just because I have a legacy of being a gold investor. So, and as you get older, you need things that are less volatile. I've got clients who have $10 million. They've spent their whole life earning it. They're 70 years old. They're not going to put $10 million in Bitcoin knowing that it could go down 50%. They just can't. But if they want to protect against monetary debasement, I'm like, fine. Why don't you put $4 million in Bitcoin and $6 million in gold? And the biggest drawdown gold ever had was in the 20% range. And generally speaking, gold is up almost every year. And over long periods of time, it's up 8% a year. So it's much less volatile, and you can't print it. Understand that it's an invention. We discovered and we created digital scarcity. So in looking at it, you need to think of it, radio was an invention, TV was an invention, cell phones an invention, cars an invention, printing. It is an invention. Before we had it, we never had digital scarcity. Okay. Why does that matter? Well, because money is all about scarcity. You need to have money be good. It needs to be scarce. You can't have sand as money because there's an unlimited amount of sand. You can't have water as money, there's an unlimited amount of water. And through 5,000 years of history, probably one of the scarcest elements on the planet, it's not the scarcest, but it's because they're small elements that are scarcer. But a widely distributed scarce element is gold, right? And so 5,000 years, people determined that gold was a good form of money because it's scarce. The supply only goes up at 1.5% a year. And, it was the best money that we had, until Bitcoin came along. And, fiat money is vastly inferior. We don't need to go into that. But, and so what Bitcoin really is it's digital gold, only it's better. And the reason gold is so good is that stock to flow is very, very high. In other words, there's a huge stock of gold in the world, 200,000 tons, and we only mine, a little over 3,000 tons a year. So that's like 1.5% that we increase the supply.
According to Larry Lepard, there is a significant stock of gold in the world, with approximately 200,000 tons. However, our annual mining rate is relatively low, at just over 3,000 tons. This means that we are only increasing the supply by about 1.5% each year. Currently, the supply of Bitcoin is increasing by approximately 1.5% per year. In just 20 days, we will experience a significant event known as the halving. We anticipate a 50% decrease, translating into a 75% annual decrease. We project this trend to persist for the next 4 years. It's going to be approximately half of that, and gradually decrease as it approaches zero. So in all honesty, we have a superior form of currency that is more reliable than gold based on its stock-to-flow ratio. Stock-to-flow is a crucial measure for determining monetary value, so Larry Lepard understands that you mentioned the difficulty of something, stating that it is the most challenging form of currency ever. One advantage over gold is its lack of storage costs and its easy digital transferability. You immediately understand that Larry Lepard implies that storing gold incurs costs. It can be challenging to confirm the existence of counterfeit gold or fake gold bars. Contain tungsten as a component. Larry has sold gold bars to individuals who are required to split them in half and then bill me. They may incur a remelting fee or require a specialized machine to verify the authenticity of the gold. Let's back to the Larry Lepard interview.
In the case of Bitcoin, right now the supply increases about 1.5% a year. In about 20 days, we're going to have a halving, and that's going to fall in half. So it's going to be 0.75, 3/4% a year. And then in another 4 years, it's going to be, half of that. And then, just asymptotically as it approaches zero. And so, the fact of the matter is we've got a better form of money that's sounder than gold on a stock to flow basis. And in value terms, stock to flow is the most important measure for monetary value. So,
that says something about the hardness.
It is the hardest form of money that ever existed. It's also superior to gold in the sense that there's no cost to store it, and you can digitally move it, instantly. I mean, gold costs money to store. It's hard to verify. There's been fake gold or fake gold bars that have tungsten inside them. I've sold gold bars to people, and they have to either cut them in half and charge me a resmelting fee, or they have to have the right kind of machine that can look inside to make sure it's really gold. And, by the way, try and take $1 billion of gold and move it from point A to point B. I mean, you're going to need a, semi truck or a heavy lifting airplane. So, and you can move $1 billion of, Bitcoin in 10 minutes. So, so it's got a lot of monetary properties that I think make it better than gold. Because, it is a form of quote unquote digital gold. And the other reason that it's better than gold, and the thing that I think is going to make it outperform gold, there's a couple of hedge fund guys. One of the guys, Paul Tudor Jones, very brilliant guy, said, in the monetary debasement race, Bitcoin is the fastest horse. And he's right. I mean, one, the price of gold has been suppressed. That's a whole different long conversation. We don't need to go there. But you got two things going on. We talked earlier, the government is debasing the money. We know that. That's a fact. That's provable. You can see M2 growing consistently for year after year. And that's your more supply of money, same number of goods, prices go up. Okay, fine. We know that's true. We know that's a trend. We know that trend is getting worse. That will drive the price of everything up. It'll especially drive up the price, though, of things that can't be printed, like gold and Bitcoin. gold is fully distributed. It's been around 5,000 years. Everyone who wants gold knows what it is, has gold. You know, it's got a huge Lindy effect of having been out there. Bitcoin's been around 15 years, and the whole world doesn't know about it yet. And so you've got it's cool because you've not only got something that'll go up because the government's printing money and there's monetary debasement, but also you've got an adoption curve, you know, and you've got, I mean, what do we got? 8 billion people, 21 million. I mean, every person in the world can't have even like a tenth of a coin. You've got 54 million millionaires in the world. You got 21 million Bitcoin, some of which have been lost, but forget that for a moment. Every millionaire in the world could only own half a Bitcoin. I mean, right? And so, and by the way, most of them aren't aware of it yet. And so, you know, we're not even at that 10% tipping point. So we're just so very, very early, Bram, in terms of acceptance. And, you know, the way I tend to look at it is at a macro level, it's about 700 trillion of wealth in the world. That includes real estate. Let's take the real estate out. Let's say there's 350 trillion of real estate and 350 trillion of stocks, bonds, you know, currency, paper, all that kind of stuff, gold. You know, the entire market cap right now of Bitcoin is 1.3 trillion. So all the Bitcoin in the world is worth 1.3 trillion. All the other stuff in the world is 350 trillion.
According to Larry Lepard, the price of gold has been manipulated, which presents a unique and complex situation. Let's not delve into that conversation, but there are two things happening that we need to address. As we discussed earlier, it is evident that the government is devaluing the currency. This fact can be proven by examining M2, consistently growing year after year with a steady increase in money supply and the same number of goods prices are on the rise, and that's all right. We are aware of the truth, we acknowledge the existence of this trend, and we understand that this trend is deteriorating, which will have an impact. With the surge in prices, there will be a notable impact on commodities such as gold, which cannot be easily replicated. Bitcoin gold has been fully distributed and has a long history of around 5,000 years. Anyone interested in gold is well aware of its value and significance. It's quite fascinating to observe the significant impact that Bitcoin has had over the past 15 years. The entire world is still unaware of this, but it's quite fascinating because you possess something that has the potential to become popular. It's evident that the government is increasing the money supply, leading to monetary debasement. Additionally, there is an adoption curve to consider. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.